Hello and welcome to Sibos TV. I'm Juliette Foster. Coming up here on Good Morning Sibos, we'll be looking at GPI's impact on cross-border payments and what the future holds. Plus, why Australia's banking industry is getting a reputation as one of the most innovative in the world. And we're uncovering the hidden pressures on asset management. That's all to come in the next half hour here on Sibos TV.
Since GPI was launched less than 2 years ago, it has had a significant impact on cross-border payments. Joining me to provide us with an update on GPI's progress so far and to tell us about their plans for its future, from Swift we're joined by Raymaekers, Head of GPI Portfolio Evolution, and Thierry, Head of GPI Customer Success Team. Gentlemen, welcome to Sibos TV.
Good morning.
Thank you very much for being here. Now, we'll start with you. GPI has obviously been enthusiastically embraced by the banks and the wider industry. Who and how many are on board now?
Well, indeed, GPI is transforming the cross-border experience, and it's been the biggest initiative, we think, in the last 40 years. And that, indeed, is shown by the number of banks who have joined this initiative. Over 280 banking groups have joined the GPI initiative, and they represent over 80% of the total cross-border payments on Swift.
Wow.
And they send about 1 million payments every day for a value of over 100 billion through GPI worldwide.
That sounds like incredible performance. Has that lived up to or exceeded your expectations?
No, absolutely. And one of the benefits that GPI brings is, for instance, the transparency and the tracking of cross-border payments. So we see you can track the payment end to end, and we see that more than 40% of all those payments are actually credited within 5 minutes. And that means that banks can provide a better transparency service to their customers, and they can also reduce the number of investigations. Because previously you didn't know where the payment was, you had to call your bank, the bank had to call the other bank, and so forth. So now you can see in real time where your payment is, and that also reduces the investigation cost between banks and provides a better service to their end clients.
It's incredibly exciting. Thierry, in your view, what are the keys to unleashing the full potential of GPI?
I'm going to follow up on what Wim said. I think it's about, we are about these 280 banks. The full potential is about global adoption. So how do we go from this success that we've created so far, this momentum that is building in the industry, to have every single bank on the network be able to speak in a GPI language? So I would call it the new digital rail. This is what it is. It is growing, and the speed at which we're able to extend that rail to everybody in the ecosystem is what will unlock the full potential.
That's an incredibly exciting vision. Talk to us about strategy. How can we get to a place of universal adoption?
That's even more exciting than the beginning. So the ambition has raised with GPI. So how are we going to go about it? I think the first word that comes to mind is partnership, because GPI is about an ecosystem play. We have worked with the largest players right now that represent 80% of the flows, as you've said, and we want to go beyond. So partnership play, working with the corporates that transact with the banks, working with the banks that serve other banks, the market infrastructure. So we want to make sure, and also I don't want to forget, all the third-party ecosystem, so the application providers that are supporting the banks. That's how we're going to go to universal reach. And there's something very fundamental that's going to happen in a couple of weeks' times. With the new standard release, so GPI so far has been able to track payments in between GPI bank. Now we're coming to an amazing moment right now, whereby in November, we'll be able to trace a payment anywhere that the payment is on the network.
It's incredibly exciting stuff. Wim, as the lead of GPI Portfolio Evolution, which other exciting products and services are you exploring at the moment?
Well, indeed, we don't stop there. As Thierry said, GPI is all about collaboration and co-creation. So in addition to what we've already deployed and banks have embraced, we're looking to build the next value-added set of GPI services together with banks and partners in the ecosystem. For instance, want to mention, which actually was very successful in a pilot here in Asia, payments from China, Thailand, Singapore, cross-border into Australia, being settled domestically through the NPP instant payment service. And we see that the overall payment experience is under 18 seconds. Cross-border, domestically cleared into Australia. Fantastic new development. Secondly, banks are also extending that experience that they now have between banks to their clients, providing for the tracking and the tracing so that corporates have that visibility and transparency in their applications. So it's really about extending the value between banks and also extending the value further to the end clients of our bank customers.
Thierry, your lead for GPI customer success team. Now, we mentioned universal adoption. How else would you define success?
Nothing short, but to say we want to transform the world of cross-border payments.
Right.
And maybe I say a bit more what's behind this transformation that we envisage. And we can probably extend that transformation to any financial transaction. We live in an exciting world where technology is enabling completely different experiences. And we want to, I'd say, delight our customers. Our customers are directly the banks connected to the network. And we want to help the banks delight their own customers with the user experience that they will get. So success for me looks like in phases, because as we've been very successful so far, it's just a question of growing the ambition. The next phase is to be as wide as possible with GPI, with many parties everywhere in the world using the GPI rails. The second layer of success is building customer-centric, solving real problems for the customers. Right? And this is quite an important one because we want to do this in dialogue with the banks. Where do they see the next value to be added? And we would know that we were successful when in the end, what each party in the chain will get is a better value for their money. That's what we're really working towards. And I'm really glad to be able to be here in Sydney this week and share that with all the different delegates.
As are we. Wim, what's your message about GPI for the delegates here at Sibos this week?
Well, the message for delegates here at Sibos this week would be join GPI if you're not on it yet.
It's quite a simple message.
It's the new norm, so join the new norm.
Fantastic. Wim Raymaekers and Thierry Chilosi, thank you so much for joining us here on Sibos TV. We appreciate you being with us.
Thank you.
Australia's banking industry is very unusual. It has only 4 main banks and serves a population of only 24 million people.
Yet, it is one of the most innovative in the world. To tell us more, we're joined by Janice, Head of Australia Global Transaction Services at Bank of America, Merrill Lynch. Janice, welcome to Sibos TV.
Thank you, Jack.
Thank you so much for joining us. Now, you've worked in the financial industry in Hong Kong, Singapore, Malaysia, and now Australia. What are the key trends that you see across the Asia-Pacific region?
I think if there's anything that we have heard in today's first day session is that change is the only constant. I know it sounds cliche, but the reality is there's a lot of change going on amongst us, and the speed of change is what we need to keep up to. And there's a lot of driving forces behind, what these changes are. It's not just a trend for Asia Pacific, but it's a trend across multiple regions as well. One is the ever-changing regulatory environment. And you can say regulatory changes in the form of stricter tightening of regulations that could actually stifle innovation in some ways because it derails us from focusing on innovating and focusing on anything that ultimately brings value and something new to enhance customer experience. But at the same time, there's also quite a fair bit of deregulation happening in other markets, in emerging markets in particular, because these deregulations are required so that the markets and the countries can actually compete with the other developed countries. So that's one. I think the second area in which we see a lot of change is really in technology. I wouldn't even call it emerging technology. I think the new technologies and the emerging technologies are already within us right now. We live and breathe technology on a daily basis. And it's what do we do and how much can we take advantage of the technology that's already here, the here and the now, and what we ultimately do to transform our customer service model to our clients. And last but not least, it's really the adoption in mobile. I mean, nowhere in this world, I think we agree, other than this part of the region, where you're actually seeing how quickly mobile technologies are adopted. I mean, 10 years ago, I would never dream of conducting banking on my mobile. today, it's the only thing I know. I can't even tell you if I went onto my laptop and I tried to log in. I can't tell you the additional authentication that the laptop is asking me, because all I know is my thumbprint that goes onto my iPhone. And you can think about, you can look at China, for example. It's a classic example of how they've actually completely skipped a generation of payments. From cash, forget about checks. I know many economies, large economies at that, are still grappling with how to deal with checks and moving from analog to digital. But China has completely taken a leap of faith. I mean, it's nobody talks about cash now. I don't think anyone in the millennials generation has ever had a checkbook. Everyone is talking about mobile and digital wallet. So I would say key trend, change, and pace of change, speed of change, and how do we then as financial institutions react and adapt to some of these changes?
And let's take that concept of change, the dynamics, and apply it to Australia, a land of contradictions, that you've got a big country with a very small population, but how vulnerable is it to the macroeconomic trends that are being played out in other countries?
Well, what's unique about the Australia financial markets and the economy is the very fact that we've actually enjoyed 27 years of consecutive economic growth. I think people often take that for granted. Not many other countries can come out there and say, yeah, I've had 5, 10, 20, 27 years of economic growth. Australia is in a unique situation where it's a large country by geography. It's a small population relative to its size, but by no means is it a small economy. It is the 13th largest economy in the world. And I think, in terms of its vulnerability, I mean, we have seen strong population growth, aided by, certain loose financial conditions, for example. Low interest environment. For 2 years, we've held our interest conditions. We've got a relatively weaker Aussie dollar in 2018. All of that have translated to quite a fair bit of boom in terms of growth in infrastructure investment. And I think that in itself, says a lot to us in terms of the resiliency of the Australian economy going forward. Now, having said that, the geopolitical environment is changing. There's a lot happening in that space. And as a firm, our focus really is helping our clients anticipate and adapt to what some of those changes are, in particular in the risk management area.
Due to a lot of the factors that we're discussing, do financial institutions in Australia face different challenges to those in Asia or other parts of the world?
Yes and no. I think no, in that we are seeing a lot of changes taking place across the marketplace. And when you say regulatory environment is changing in one market, let's say China or in India, for example, the reality is a lot of Australian businesses also conduct business with these counterparties. So no change in one country doesn't impact the rest of the world. So I'd say, from that perspective, the changes that are taking place, the challenges that are being experienced and being observed in current marketplace is very much felt in Australia. Having said that, I think Australia has a bit of a unique advantage. Going back to the earlier point around, economic growth, less disruption in terms of, financial markets instability, and frankly, a relatively safe and sound financial system allows for Australians and the Australian banking sector to actually reflect and review the past, its current state. Are there opportunities for us to rise above and innovate, because we don't have all the other disruptions that's taking place in the market to derail us from actually focusing on what the customer proposition ultimately is.
And let's stay with the theme of innovation, because the financial services sector in this country is extremely innovative. So you touched on one reason as to why that is the case, but clearly there are others. But also, what does it mean for banks operating in this country, effectively 4 big banks?
I think it means that banks need to collaborate. At the end of the day, the pie is this size. Yes, with economic growth, with globalization, the pie can continue to grow bigger, but you cannot expect that the pie doubles and triples in its size. And we need to come together and collaborate in order to provide and transform the customer proposition. I would say that Australia has been able to innovate as a result of the growth and the stability that we've experienced. I would also say that we have to recognize that there's quite a fair bit of uniformity that exists within the financial services industry in Australia. For starters, we all speak English. All our clearing systems are only a handful in the entire country. It's nationwide. We don't necessarily have the complexities around tariff controls, around currency exchange and capital injection. So all of that allows for a platform for us to better ourselves, and ultimately it's on to ourselves to come together, look at our peer banks in the eyes, and the industry players as well as fintechs, and say we've got to come together and collaborate so that the model that we have today, we can actually transform it not just domestically but benefit everyone across the borders.
That is very powerful. And Janice, one of Australia's biggest recent innovations was its real-time payment system, the new payments platform, or NPP as we know it. What impact has that had on your clients since it was launched a year ago?
Yeah, so the NPP was launched in February of this year. And what it allows us to do is, if Jack, you and I wanted to go to a bar for a drink after this, and you paid for me, but you actually wanted the $6 back from me, I am able to...
Wouldn't be a very good friend in that instance.
But we don't know each other that well yet. So I can instantaneously, through what is called a Pay ID. I do not need to have your bank account details. I don't need to have a BSB number. Just give me a mobile number or an email address, and I can instantaneously transfer $6 back into your bank account through that Pay ID. Plus, I could give you 280 characters as references, including a beer icon as an emoji. And believe me, consumers in Australia love a good emoji. They love emojis. So that is its current state at the moment. Now, at Bank of America Merrill Lynch, the customer base that we serve internationally, including in Australia, really are in the corporate and institutional space. So the NPP at its current state, in terms of its applicability, is probably somewhat limited. I mean, no one corporate organization wakes up and said, I got to make that payment right now and I need it instantaneously. But they would love to receive instantaneously because it's liquidity and it's reconciliation. So I'm excited about the prospect of what NPP will bring when it implements the OSCO 2 and 3 overlay services, which comes with the ability to request for a payment, as well as data that can be attached to the payment itself for straight-through reconciliation. So I'd say watch this space. I think there's a lot of applicability to the corporate institutional space, not immediately in its current state, but certainly in the next 12 months.
And certainly people are watching because there's been a lot of talk about NPP at Sibos, and also artificial intelligence, one of the big topics as well. So from Bank of America's perspective, what's being done with AI for your Australian clients?
So we've been very excited gearing up to the start of 2018. We've just launched an AI-based service to allow for our client base to achieve straight-through reconciliation. And what that means is if you are a large corporation receiving 1,000 transactions a month, and with each transaction, you could have 100 invoices attached to it. Sometimes you aren't necessarily able to tell specifically what you're being paid for. It's great you have the funds sitting in your account, but it works nothing for you if you can't apply cash. So the AI technology that we've deployed serves exactly that purpose and serves exactly that gap that corporates have. And that is in its ability to 100% on an accurate basis match what the incoming invoices are against the funds that have hit the bank accounts. And if there's not a 100% match, what potentially could be suggested matches? And we throw those as exceptions back to the corporate for them to manage. So today you could have, a receivables that is matched on a, let's say, 50% basis. Tomorrow with AI, and AI is hungry for data. The more data set you throw at it, the more it's going to learn and the more it gets better and improves. So if you were to be able to increase the accuracy, say up to 80%, effectively as an organization, you only are left with 20% that you need to manage as suggested match or completely unmatched items. And I think the power is really in our ability to take away operational tasks from our clients. Ultimately, as a business, what should you be focusing on? Your business. You should be focusing on growing your top and bottom line. You should be focusing on your customer proposition. not on receipting and matching invoices in the back end. That's something that the bank can do for you because the data is already there for us to manage and for us to analyze.
Some very exciting developments indeed. Janice Dang from Bank of America, thank you so much for joining us on Sibos TV.
Thank you for having me.
Pleasure.
It's been a pleasure.
Asset managers have delivered strong top lines for the past couple of years, but mostly driven by growth in asset value.
But the industry continues to face significant challenges, which in turn impact the post-trade world. Well, to talk us through what's happening in asset management and the hidden pressures on it, I'm delighted to say that we're joined by Sumitra Karthikeyan, who is a partner at the Boston Consulting Group and leads their securities services practice globally. So a very warm welcome to Sibos TV, Sumitra. And look, there have been a number of key trends in the asset management industry over the years. So what are they?
As you mentioned, I think what is really interesting recently is that there's been the highest level of asset growth in almost over a decade. And I would think of it as an opportunity for the industry because while asset growth has been high, fee pressure continues. And this is across most products and asset classes. And I really do think that the industry has an opportunity to look at their cost in a very significant way to make use of this opportunity in asset growth and really improve the margins. Asset growth may not last forever, so this is really an opportunity for the industry to transform margins based on the cost and the product side.
Sumitra, what are some of the key challenges you see facing the industry right now?
Yeah, I think multiple. First of all, I think there is a lot of innovation happening in products, and companies that have embraced this and made the use of data and analytics to really improve returns in a very customized way for their investors, whether it's institutional or retail, are the ones who are getting the winning formula. Others who have not embraced product innovation in the same way are the ones that are seeing their returns really challenged. I would also say for long this industry is focused a lot on the investment side, the front office side, which makes a lot of sense. But increasingly the differentiation also comes from how you manage your cost structure, your operating model. And things like automation and digital play a very important role. And if you look around in financial services as a whole, I would say asset management's probably been a little slow to adapt to these changes.
And what impact are these trends actually having on the post-trade industry, given this backdrop against which it's being played out?
Yeah. So it's very interesting that the post-trade can be a way for the asset management industry to really improve the changes both on the cost side and truly leverage data. In some ways, they are dependent on the post-trade for the vast amount of data that they can harness. And they're also dependent on the post-trade to make significant changes in their cost model. So post-trade industry can really support the asset management industry in both of these trends. And I would say they're beginning to do so definitely on the cost side with more best-of-breed, front-to-back integration of the latest technology deploying digital. I would say on the data side, it's probably still early days. There's a lot of experimentation going on, but I don't think scalable solutions are to be seen in the industry yet.
There's obviously a lot of changes on the horizon. How are post-trade firms coping with the changes? What are they doing differently?
Yeah. I think the post-trade firms first started by looking inward in terms of improving what traditionally has been an operations-heavy processing industry to something that's a more digital and technology-savvy industry. But as they look inwards, I think they also understand that some of the learnings they've had, their own client base in terms of the asset managers can leverage. And so many of them are now working with their clients directly to understand what their needs are and helping them adapt digital in a faster way. That's clearly an area that we are seeing. The second one, I think, on data, as I mentioned before, it's still an experimentation stage, but firms that have been able to understand how to bring data in a very granular way, where latency is low, it's almost real time, definitely are beginning to see traction. API adoption is an example of that, where many of the large global custodians and even the smaller regional custodians are looking at APIs as a means to deliver data almost real time to their clients.
And let's stay with this idea of APIs as an example of adapting to these changes, because what would you see as the role of APIs between asset managers and post-trade service providers?
Yeah, so it's exciting, and I would be wrong to predict the future in terms of what will happen, but I think the first use cases we are seeing in API is really getting data in a real-time fashion, especially if you look at asset managers who are trying to differentiate themselves in passive strategy or alternative strategy. Data plays a very important role. And the difference between 1 bip of performance could really depend on how quickly you get the data, how granular you get the data in. Going forward, we see this as an area where there's a lot of value-added services possible, both for asset managers and then in turn for the asset managers to do it for their investor base. The post-trade industry collectively sits on a ton of really, really valuable data. I think so far there hasn't been a concentrated effort to bring that together, aggregate it, and provide value-added services on top of it. Part of it is because the quality of the data itself was not great to wrap your head around. So going forward, that's an area where I definitely see benefit for both sides of the industry. The post-trade servicing firms, in order to better serve their clients and also manage their cost structure better, and for asset manager firms to differentiate themselves on products and performance, which is where they've been struggling in the recent past.
Sumitra, do you have a view on who's best positioned to take advantage of the opportunities of the changing landscape?
Yeah, that's a great question. In the past, this industry really depended on scale, and to some extent regulatory protection to be able to serve the industry. I think with the play of data and digital, I wouldn't say those two advantages go away, but they certainly diminish in strength to some extent. And so I don't think it's easy to say that certain types of firms will win in terms of size. But it's definitely clear that those who embrace data and digital in a way that is client-facing, not just internally for their own cost and operations, but to serve asset managers better, will both be able to get more business, but more importantly, more profitable business, because the asset management side is willing to pay for value-added services.
Okay, so challenging times ahead, but Sumitra, Karthikeyan, Boston Consulting Group, thank you so much for joining us here on Sibos TV, and enjoy the event.
Thank you. Thanks for having me.
That's it for this show, but there's much more coming up here on Sibos TV, including live coverage of the breakfast keynote with renowned author Parag Khanna. He'll be taking a look at how megatrends are reshaping the established world order, creating an uncertain backdrop to strategic and tactical decisions. That's next, but we'll be back with more in Talking Sibos right here very soon.